The future is going to be a future where you and I, everyone who wants to have the access, whether you have a bank account or not, you will have a digital wallet. And with this digital wallet, you can interact with the world. You can buy cryptocurrencies, you can buy stocks, you can buy options, you can trade cross-firm and cross-country and cross-continent. We live in a world where we have siloed capital markets. There's many of them and they're not connected. They work on different jurisdictions, different timelines, different rules and regulations. If we can create a world where we have one global capital market on one golden source of truth that can plug into multiple different entities, then everyone can connect and we can truly globalize finance and synchronize it. So that's the vision. And I certainly hope that we get there. I think, again, it might take about a decade for us to get there, but that is the hope.
Why is now the right time for blockchain in the markets?
When you speak of Bitcoin, it's interesting. Since the inception of Bitcoin, these kind of real-time settlements have been happening. So when you look at the crypto side of the world and trades and settlements, that has been happening since the inception. It has never been with the traditional systems, but we can bring and replicate the same smart contract technology for our traditional financial side. And with that, I think that the regulators are more ready than ever. There's a lot of tests happening today. We've had way too many test concepts and pilots to prove that blockchain can actually solve for some of the problems that we have seen before. So it is the vision of these self-synchronizing markets where programmable assets and tokenized cash or tokenized deposits or stable coins can interact 24/7. So far, we have been operating in systems that are firm-centric, but the future of financial systems will be more asset-centric when asset turns into software.
Are we starting to see some of the real-time capabilities of blockchain?
Some folks are using blockchain at a very limited pace. They just use the smart contract for certain things, and they're still using centralized databases and some of the traditional clearinghouse ways of clearing the trade or settling the trade or netting it. But most of the institutional trades that are happening now in institutional crypto, they're all moving towards using the systems that can actually do all the netting. Because if you think about it, John, blockchain is an accounting system on so many different levels, right? So a distributed ledger is a golden source of truth that can do all the accounting, all the settlements. When you create and build specific smart contract technologies into it, then you can write all the rules and regulations. So if we are able to tokenize an asset and we're able to bring it onto the blockchain and also tokenize the cash, what happens is that an asset knows its rules of when it needs to clear, where it belongs to, where it needs to go, and when it needs to go. So everything happens autonomously in a programmable way, and the asset can do all of the work. Well, in crypto, it's easy because it's just a currency. If it's only a currency, it's easy to you don't need to really tokenize the currency itself. You can just use the smart contract technology to do the settlement. But with other assets, we also need to use the tokenization. So I would say yes, on the crypto institutional side, we're doing the same thing where we're using these technologies and we're using actually our own technology to do this, to be able to do the reconciliations at the end of the day, and then bringing it into the traditional financial side as well. T+1 is what showed us that this is needed, right? T+1 showed us that if we can compress the time and we can reduce the timing and all the badging and all the netting, we can do everything in a much faster way. We can do everything in a more trusted way. But the problem is some of the smaller firms don't have the operations, don't have the resources that they need to compress that time. But with blockchain, what we refer to as T+0 or continuous finance, what we can do is we can just remove and eliminate the whole element of time in a way that all the operations can be automated via smart contract. Then we don't have any of those problems anymore. And also with a single golden source of truth, you don't have to reconcile amongst multiple different systems.
What markets are the low-hanging fruit?
I think commercial paper will. I think FX will. We see DTCC's project Ion is now live, right? Is this the IZITC chair is talking about the path to T+0. I think exchange settlements are cutting counterparty risk. Bridgeport is talking about this. All the back office work that is happening for operations is going to be converted to blockchain. So I don't really think that there is, I think all of these assets can be tokenized. It depends on the technology is not the bottleneck. I would say the bottleneck is where we need a collaboration between the regulations and between firms and between the financial institutions to synchronize and come into an agreement of actually moving forward. But I come from the tech perspective, I don't come from the capital markets perspective. And from the technology side, the innovation is done. We are ready to move in and to tokenize any assets that they give us. And there's multiple players in this space that can do the same.
Have any markets been done successfully yet?
We actually had a pilot with FX where there was parallel production of the traditional system and on the blockchain to kind of compare how this works. And what happened is we went from some trades being settled within 72 hours to settlements of less than 5 minutes, right? It's like trillions of dollars in FX trading is happening. So the numbers are really large. The other thing that happened was the counterparty risk reduction was 90%. That's a huge number, right? And when you're talking about trillions of dollars in assets that are going to be freed sooner, then the more you can trade, there's so many things that can be done with that money. So FX is a wonderful one, right? Like when you're talking about trades that are being you lend against the trades and then you can call the stocks back. That's another option that is very easy to bring on blockchain. But today, the interesting thing about blockchains and smart contract technologies that can handle complex financial solutions or complex financial equations is that you can tokenize any asset on one hand, and then you can manage it on the blockchain on the other hand. You can tokenize a private credit fund, you can tokenize a bond, we can tokenize trades, we can tokenize stocks. So we can even tokenize Bitcoin, right? Because Bitcoin itself doesn't have a very sophisticated smart contract technology, but by tokenizing it, then we can have it across multiple different systems and we're able to actually lend against it, borrow against it, stake it at much higher values than we were able to before.
Do traders lose their ability for netting?
The netting process is something that still can be done in blockchain. Even in blockchain transactions, a lot of times it depends on the requirements of the trade. In blockchain, a lot of times we batch transactions. We batch, and that's what a lot of layer twos are for. But we batch multiple thousands, sometimes millions of transactions, and we settle them all at once because it is a lot cheaper and a lot more effective to do it that way as opposed to one by one. So it can happen the same exact way, but it will just be automated. Like today's settlement is focused on batch processes and reconciliations, which run inside the bank and asset managers independently across thousands of assets. Inverting the settlement to be asset-centric with blockchain and with settlement logic attached to the assets will be shared across firm on the blockchain can greatly simplify the middle and back office processes. This is really what's going to happen, not to remove the netting or the badging process. It's just automating it and the asset can carry the logic with it. So the way it is happening today is we have multiple people that are involved. We have the brokers, we have the clearing house, we have the financial institutions, and multiple people are responsible for different parts of the rules of the trade. When it's netting, how it's settling, where it's going, when it's going to be recalled, all of these rules are going to be programmed into the asset as a software. That's the interesting thing is that when the asset is tokenized, it's almost like it's carrying a supercomputer at the heart of it at all times. That's why we say it's no longer firm-centric, it's asset-centric. And it can execute on all of the rules based on the timing and based on the rules that it is given. So it makes it a lot easier. It's not to remove, say, the middleman or the brokers. It turns them from bottlenecks into trust anchors, if that makes sense, because the asset can automatically do all of that.
What types of intermediaries will be eliminated?
I don't think that initially a lot of people are going to be diminished. I think we still need the clearinghouse, we still need the brokers, we still need the financial institutions. It is just that a lot of this is going, as I said, from bottlenecks, they turn into trust anchors. So us, the middle people that are now managing all of the operations of it, we become the programmers of these software assets, right? So we still need to be telling the asset and programming all the rules, what it needs to do, when it needs to do it, where it belongs, and we're observing and monitoring everything that is happening. But all the admin back-end office of this is now converted into a software that can autonomously manage as we tell it what to do. So in some ways, our work is less, but in some way, our work is more, right? You're sleeping, but when you're waking up, there's 8 hours of work that has been done that you need to manage and look through and see what has to be done. Kind of like the same thing as intelligence and AI has done for us. We can also have artificial intelligence, which is something that all of us are working, a lot of us are working on, is that with AI, when we have one golden source of truth of all the data that exists, is when you can actually attach AI. We can have better reportings. We can know when the losses are happening. We can know how we can have better market conditions, how we can make better trades, because artificial intelligence only works when the database is actually streamlined. When you have multiple different data sources, you can't attach intelligence to it seamlessly.
Is T plus 0 worth the risk of not being able to fix errors?
All of those risks exist today. We have a lot of risk, and the T plus 0 will eliminate a lot of the counterparty risk, a lot of the timing risk, a lot of the currency difference. There's so many risks that by real-time finance we can eliminate. And if it introduces, I don't know, 5% risk as opposed to 40% risk that is eliminating, I'm just using these numbers, they're not literal, I would take that win. Bugs exist in every technology. Automation has already happened in T plus 1, even in T plus 2. Our systems are automated. Bugs are there. Hacks are there. But in systems like blockchain, they're immutable. There is privacy in certain systems, like asset operating systems that we have introduced. So all of these risks that already exist are going to be drastically eliminated or reduced by the systems in T plus 0.
How will the courts update to a system with no undo?
Well, I don't think like with bugs and outages, we actually lose a lot of money. Error happens if there's a hack or if the person who's programming or managing the settlement, the broker makes a mistake, right? Those are the errors that could potentially happen. But I would say that we have spent a lot of time on creating pathways that make it a little bit easier and make it so that we can, if we need to make changes, we can make changes. And that requires private blockchains. Because on public blockchains, there's two problems. One is that everything is public. And I think in a lot of these systems, we require privacy. We don't want the data to be public. And if it is public, we're actually going against a lot of security and a lot of privacy laws. So we need privacy. And the second thing is, although there is decentralization, that is amongst consensus parties. So if something needs to be done, it can be redone or it can be fixed. Now, if mistakes happen the way they happen today, it's like people ask me if people lose their Bitcoin private key and they lose it, what happens? I'm like, the same thing as if you lose your cash. No one can do anything for you, right? It is the same thing. It solves some problems and introduces new problems. But the good thing about blockchain, private blockchains, is that we're programming the privacy and the security laws in the blockchain so that your assets are private, so that there is a few people that are observing and monitoring and approving a transaction. It's not just a click of a button and gone. There's a lot of things that are being done to make sure that there is like transactions are triple and double checked before they're submitted. But is that again going to be 0% error? I don't think so.
What will motivate the move to T plus 0?
T plus 1, broadly speaking, is what really paved the way for T plus 0 on many ways. And I don't think T plus 0 means instant and right now. But again, I think that we should be focusing on more of a continuous finance, programmable finance, right? Assets or finance as software. And we're ready for that. We have done a lot of the tests. I think when we see regulated entities doing pilots and talking about this and realizing that operation cost is going to be reduced by 60 to 80% by using software, just like it did in the automation world, right? Of a lot of different industries. The reason why finance is one of the latest industries to adopt is because it is one of the most highly regulated industries. We need to be able to code privacy. We need to be able to code and test so many things before we can actually, there's different jurisdictions and different laws and regulations in every jurisdiction. But the technology is now ready. We have done so much, I think, in the past few years. Now, I don't think, John, this is something that's going to happen in the next 2 years. I think in the next 2 to 3 years, we're going to see a lot of improvements, but it's probably something that we're looking at a decade for full-on adoption across all different assets. But again, it's going to be assets that become software. I think they are programmable. They have privacy. They inherit privacy. They will be policy aware. I think tokenization will make markets intelligent, right? It will make every asset know its route, rules, and counterparties, which will make all the difference in the world. Again, I would say that, well, like T plus zero compressed time, blockchain will remove it as a variable altogether and will transform settlement from being a process into being a property of the system or the asset itself.